Alright, what's going on, guys? This is the trade breakdown for Wednesday after CPI. So today we caught longs pretty much right after 9:30, um, and I will go over this trade. So we are going to start on the weekly chart. This would be your new weekly order block, right? We close above right here on Monday. This is your new down close candle, big thick body. This should support price. So that sell off yesterday was seeking this weekly order block, but as you can see, NQ never hits it, right? Now, if you go to ES and we go to the weekly, what do we have? That same down close candle from the 11th, right? And ES is inside of the weekly order block wick. So now we have SMT at a really important level, high probability area of reversal. And so now we go to the daily time frame, right? Not really any FEGs in here. If you're looking at this in a pattern trading mindset, you see the candle closure below here, and then now you think there's a change in the state of delivery. You get your continuation on Tuesday, and then you get face ripped going into Wednesday. So understanding that there's a SMT at the weekly order block, you now have to go to the lower time frame. So you can see NQ is still inside of that first daily fair value gap, never gets inversed. Look at the candle bodies closing above, right on top of that weekly, or right on top of the high of that daily fair value gap. And more importantly, let's look at the 4 hour. This would be your low from Thursday, right? If you zoom back out with now this low highlighted, what is that low? That low is the lowest low inside of the daily fair value gap. So that is a important area of liquidity. And what do you have here from Monday? You have a failure swing. So now you have a high probability area for a liquidity sweep. Now, if you look at the 4 hour, you can see every single candle body closing inside of this range. That is a valid turtle soup. So now that we have our narrative, and our narrative now is just look for longs, right? Longs until what? The dole is met. What is the dole? Your swing high. This is the range high. This is range low, range high. So now let's go to the 1 hour time frame. Understanding that Monday, Tuesday are going to set the range because of why? CPI on Wednesday, PPI on Thursday. So your high probability days and the days where you're going to catch these kind of 4 hour candles are going to be Wednesday and Thursday. So after everything we've already outlined, now we have our range low. We have SMT inside of that weekly order block. We're anticipating this to not get used because when the candle was put in, so you can see this was Tuesday's low, which was never taken. And now we have our key level met, daily fair value gap, the low being swept, weekly order block SMT. Now all we wait for is our confirmation candles, right? So we have our London session, we have London low, 2 a.m. candle, change in the state of delivery. Doesn't happen until when? Right here. At what time? 8:30, your news release. So now that news is confirming our bias, what's the lowest hanging fruit? We have obviously Tuesday's previous day high. So here's first dole. That gets hit pretty much right into the 9:30 bell. Right. We're not worried. We're not chasing price. Why? Because we have all-time high up here, and this was Monday's high. So this is your week's high as well. So that's also an important dole. So now, if you look at the 15-minute, we have fair value gaps, just displacement, breakaway gaps everywhere through here. So how did I get my entry? How did I find my area that I wanted to go long in? So I went to ES and NQ, same thing. Same thing was happening on ES. I waited for 9:30 since that is the opening bell. That's where you'll get your volatility. And so we had a 15-minute FEG on ES at 9 o'clock, the 9 o'clock candle. And here is the 9 o'clock candle on NQ. If we switch back and forth between these two, what do you see? ES makes a lower low, NQ fails to do so. So now we have fair value gaps, SMT, and now if you go into the lower time frame, all you're waiting for is your lower time frame signature. So since that got tapped on ES but not on NQ, and price was holding this BPR, look at the candle bodies, right? All I'm waiting for is a candle closure above the last up close candle. So this was the last, or the last down close candle, excuse me. This was the last down close candle. Or you could have used this one, but I chose to use this one just because of the thicker body and it was more aggressive, right? Those are your higher probability order blocks. So now all I did, simply put, was long the 1 minute FEG. I didn't need the order block. I anticipated that price was just going to barely tap this and then go, since we were trading with the opening volatility. And the first take profit that I had was the new week opening gap. I used the low just in case we did want to find any kind of resistance here, but this was, I do still have to work on taking partials, right? So I was in that trade with 10 micro contracts on the NASDAQ, and this was Monday's 9 a.m. high, so that is also an important area in liquidity. So if we zoom back into the 1 minute time frame, you can see that lined up perfectly with the new week opening gap high. So that is really where I should have taken everything off. As you can see, we kind of just knifed right through this, but nothing wrong with taking profit, right? You'll never be sorry taking profit. So 5 off here, 4 off here, and then I held 1 for all-time high, which was this thicker black. We can even just make this pink, red, whatever color. This was all-time high, and so I was filled right there on my last contract for like 110 points. And so if we go to my Twitter, I can show executions real quick. Profile, and here's the executions. Went long here, partial, partial, fully out at all-time high. But that is the solid, the entire framework. That is my entire thought process behind this trade. I hope you guys learned a thing or two. If you have any questions, let me know down below, and I'll see you guys in the next one.